All right, so I think the volatility is going to dry up now, and we have some severe spikes. And I'm using this this very simple indicator. That's the ATR set to 1 instead of 14. So in this situation, we're not going to smooth anything out. It looks like the body count here is starting to trim back. If we can't make 1,000 dead people today, then so apparently this is either a virus that queued up with certain people, because I've heard about people that are young, healthy, I guess, unless they've been vaping or something, and they just bye bye, they're gone, like in 2 days. See ya. Now I don't know if that's what happens to the influenza people, and I've never really paid attention, right? So I guess does word get around? I don't know how this works, but I'm wondering if you die of influenza, is it like a long dragged out thing? Whereas this corona is like 2 days, bye bye. I didn't have a chance to even. I was in the middle of having a sandwich and a Cuban sandwich, and I'm gone. Boom. Uh, what's that like? I don't know. So if it's like getting hit by a train, then I guess it's a mercy killing, and I don't know. Maybe this died with, died with corona on him. He was just starting to get corona. In other words, he was in incubation period and got hit by a train. Is that corona? I mean, if the guy dies of kidney failure, whatever it is, I don't know. But so that's bizarre how basically everything was going smoothly, and then when these people started dying, and these people are just horrified by the numbers. But I don't think you should be too horrified if you look at these numbers realistically, because in 1970 there was only 200 million people in the United States. Now there's 320. So this many, almost 6,000 people have died from this virus. Now if this happened in 1970, wouldn't that be a little bit bigger story? And I don't know what the death was back then. And I don't know about this, the plague and the Black Plague. We used to study when we were kids. People go around, from, olden days before internet and caveman shit, people dying. I don't know. I mean, are we just so soft and wimpy that we just are so freaked out that we're like, oh, I kind of resent when I go to the store and people are wearing a mask. I'm like, I was just about to spit down your throat. What are you doing with the fucking mask in the way? I'm like, I almost want to just rip it away and say, you got to trust me. I have nothing. Watch this. I guess it'd be attempted murder at the moment. Somebody have to write a law. Hurry up, write a law. That's attempted. Um, I don't know. Are we just, and everything's volatile in that sense too. Not only the market's volatile, prices are wide and quick. Like you could scalp and make 40 pips and just be like, that's it. I mean, the market's going to retrace. It's going to pull back 70. It's going to go up 90. I mean, wheels come off. And did you see the drama? So this is the drama indicators, my 1 period ATR. Absolutely on fire. These markets. This is I'm going to go to the crude oil market, which has to be the most bombastic situation. On the 15. Now, the oil report's coming out today, blah, blah, blah. And I don't have a script for oil, but if I did, we could have sat there on the 1 hour chart and said, the whole time this market is below an ATR, this is the 1 period ATR on the bottom, we pick a range. Now, this kind of destroyed the data in the chart, so to speak. This is better than volume. This is better than 14-period ATR. The ultimate rule for who's got a wide stop, who's got a tight stop, who's got a wide take profit, and who's got a shallow take profit. And if I took the spike off, if I didn't have that data, I could stretch this out and you could see that people are living in a world of this and then that. And so as you back out, that has been achieved, that range, and that's about let me go over here and mark off the top. So without examining these bars, by range alone, this reveals the range of that bar, because it's really hard to look at this chart, honestly, and say, oh, that's kind of a small bar. What I put on a hedge trade here, and I'm just trading hedges only with this account, I'm going to just double click these, and it's a buy stop, sell stop. I start at $5,000. I'm down $2. I will not trade. I'm not trading this thing, but I'm just saying, for example, I'm not trading anything but Asian sessions. I'm going to enter on Asia. I put a stop entry here. I feel it could go up, but the reason I pulled the trigger is that 4 hours ago, I have a very small ATR. That's why I pulled the trigger. So if you really are an objective indicator trader, you set your threshold. Do I want to buy only? I only want to enter on, this is really the holy grail of objective, static driven, I don't give a fuck, non-directional trading. If you run these scripts, and I'm going to post these at the high tail, these are actually 8 hour, 6 hour, 2 hour, 12 hour bracketed, and it actually says it. So when you launch this thing, if you want to dump this to a spreadsheet, you can pick up these tickets and say, oh yeah, I remember in Asia I just kept pulling the trigger and the market was really quiet, or the market's just quiet. If you're really objective, you're just going to wait for the market to get below a certain value that you pick. Right here it happens to be 39 pips. Anything below 39 pips, I'm going to put a hedge on. And I could put one every time. Now this is where you build the robot, the ATR bot. This would be the criteria. I suppose this indicator. And I can post the indicator as a comment. And it's some silly thing where it's called my first indicator. I don't know. But I think I got it from somewhere, and I don't know the hell that's about. My first indicator, but maybe I asked somebody to design it. I don't know. So here, these aren't the best situation. We're going to get in 4 pips above on a buy stop, 4 pips below on a sell stop. And I'm saying that it's the comment's going to be in the terminal window. This will keep coming up. So I'll have the time set properly for these. These are turned off. If you wanted to get all fancy, you could put limits and stuff, but then it gets like really complicated. This is like goober trading, objective goober trading. So you see a small bar, you bracket it, buy stop, sell stop, you don't care. You know the risk is getting filled on both legs and getting chopped to death here. So say the market does one of these classic stop, like fill both legs and then go 16 pips and blow up both legs. So here's the market. It's going along, and you see the ATR value is only, here it's, hell, this is like getting into the market practically, but it's okay. If 4 pips away, we have buy stop, 6 pips away, sell stop, and the market's currently just going right down the middle here. So if we fill this buy stop, there is a stop for that entry down here. So once this is filled, we've got the stop. And the market has to trigger it by zigzagging around. And here's the danger. We fill this. We fill this. And then we go nuts. We stop out this leg without ever seeing profits. That's blow through that stop. Come ripping back. You still got an open ticket. You cashed out of that leg. When they fill both legs, tag them, and then hunt the stops without ever getting to the 42 pip take profit. So 42 pips here. I hope that makes sense. Market's cruising along. If we fill just in a clean breakout, it's perfect, right? We break out, and 12 hours later, so the long side, here's the stop, profits hit, perfect fucking world. We don't always have this situation. So I have about 10 versions of this script. from a 2.5 pip trigger, so the bracket is tight around current price. Current price is cruising in here. The worst case scenario is you fill the buy, never achieve profits, fill the sell. Now you've got a locked in losing hedge. But you're still technically in if this is in a real broker. And the other thing is, you know what? This reminds me of this Corona. It's Dodd-Frank. The planet's been Dodd-Franked. You can't trade. You can't fucking drive a car somewhere. You can't go inside the fucking store. No. It's Dodd-Franked or Frank Dodd. Because I thought, I know this feeling. I've seen this before. I'm like, yeah. I mean, it's like what a restaurant, it's Frank Dodd-Frank to a restaurant in the United States. Yep, we just made a new law. Did you hear about it? There goes your, I guess it was the Democrat, they want to take down Chick-fil-A. Is Chick-fil-A going, do it on religious grounds? We're doing Chick-fil-A like full tilt. Forget about it. We're just going to go, what do they say? Full retard. So this is and I'm running this right now, and I do think that if you do get in when the ATRs are small, before the drama starts, that, yeah, and another thing is that if I drop this script, here's the market cruising along, put a buy stop, sell stop, and the market's here now, and I have a buy stop and a sell stop, and depending on the expiration, which is the critical part here, and of course, well, it's not too critical to get in because I'm probably only going to get in. Okay, the 2-hour scripts say about 2.5 pips. It sounds right that your tighter orders are going to last less time. And the ones that are kind of a bad entry price, in other words, you're getting in late, but it's really got to break out, and you're actually saying, I will take a risk of, it's actually more than 16 pips. Right, because you're overpaying by 4. So that's like a 20 pip stop. And you're only going to make like 30. It's not a great ratio. This is just a scalp. Now, if you wanted to put in a 80 pip take profit and a 20 pip stop, I mean, on here math-wise, then the 4 pip entry, the 4 pip overpay doesn't matter so much because you're moving further and further away. Now you're going to have less and less trades, but they have to be bigger and bigger wins. So you step away from scalping into breakout psycho. The beauty of this style of trading is that it is the most objective mechanical trading you can possibly have. There's no moving average. There is no assessment of structure even. It just doesn't matter. Because when this market, it can't go sideways forever. When it takes off, yeah, it might do a little like this, and like so it's going to trap a couple of your tickets. But overall, if it's like this and your take profits are way out here in Disneyland, granted, if you keep overtrading, you keep launching the same script, yeah, and you don't have to launch this one as often as you would the 15th. So if you're trying to get picked up on a 2-hour breakout, and every time the market zigs and zags, these orders keep decaying, your exposure to getting filled on the 2-hour tickets, depending your frequency drop in that, but there's less chance for overlap. Actually, you'd be doing constant brackets like this. But the other guy was talking about, say the market's going down and you're going to run a trailing buy stop. That's like saying I'm a contrarian when we go the other way. We pick up those tickets. In this instance, it's costing you more, but it's got a huge payout. I mean, it's almost like you're leasing the trade. It's like an option in a way, but you get to pick the expiration. So the 2-hour scripts, I made more of a scalpish thing because we might just do a little burst, and you want to pick up that trade. And the big, long payout trade where the market's like this, here comes the news, bam. Forget even the slip with the slippage. Even say you get filled here, and of course, if your orders are in tight, you've probably already built a position slightly going into the news, and it's a great news script too. Even with the slippage of 4 on top of that, that's only 8. If your target is 100 pips and 80 pips, and these are news scripts, or you're basically, that's the time to run them, is get in. Even if they start to trickle, you'll see a market just kind of trickle out, and then if you're already getting filled on these, who cares about the slippage? Even if there's going to be slippage on the target too, because or you're going to see that your target's hit, but the ask hasn't come down yet, so they're not going to let you out of the trade. It's so cute when people complain about my brokers are ripping me up. Yeah, dude, you got to get filled. You're going to say goodbye to the long on the top part. With the spreads wide, you got to wait for the ask to come into what you see on the screen. So it's very disturbing. People are like, shit, man, I'm way up on that trade. And same thing in the up position there. The ask is overbid and the spread's wide, and I should be making money. Yeah, the spread it's like the spread now. With this fucking shit, everything's shut down now. So if you want to go out to so and so and do, I guess you could probably call a hooker. I guess you just still got those, right? I mean, it's a one-on-one thing, or 6 feet away. And maybe she brings plexiglass and a big body condom. And finally, my rubber fetish gear is paying off. Break that stuff out. Look at that, huh? Man, those people are ahead of their time. Bathtub. Yeah, all of a sudden, 2 girls in a bathtub doesn't look too bad. So, let's take a look at these trades. I'm just going to use my indicator as like one clean indicator of volatility, and it's better than volume. It's way more dramatic. The other one I'd like to do, which I probably could edit this one, is open to close volatility, which I did a video on it once, but it's not as dramatic. But in a robot that could see open to close, and took advantage of open to close. So the guy that's talking about the disclosure thing, I don't know. I mean, people always say that's so cute. And I guess there is that, right? I mean, people have said stuff to me like that. Hey, got to sign this disclosure. I go, really? Okay. And I mean, what they're telling me was the most ridiculous story. I don't even know if it's true about this energy machine. And I was like, I guess. I mean, I went to the site and I saw the thing. I saw a blueprint of it. And apparently it's some energy saving device. I don't know. You know what I mean? People, there's always that world of gizmos. But I'm just open source because I don't really care if you build this robot and make money. It's an obvious trade, right? Especially for a robot. It's not a drudgery you want to be involved with. Especially who wants to try to even leave their house without somebody reporting them. It's a very bizarre lifestyle that I said it's Frank Dodd meets the fucking the world. It's the expansion. And Trump said he was going to get rid of it. Well, you know what? So revenge of that mentality of, well, you can't hedge and you can't leave your house. So what else would you like to do? Like, so this is kind of a right here. I'm showing you how to how to have a restaurant. Here's how you build your restaurant. So you got tables over here. I don't know. They got to open it up, right? We're just waiting for the number to get to 500 dead a day. What is the fucking number? That's so. I'm assuming if there's only 200 people dying a day in the United States and they got more respirators and they're choking on them, they'd be like, okay, well, we got a lot of beds here. Anybody want to sleep? You know what they do? Put homeless people in the beds is what's going to happen, right? That's what Trump will do. Ship them to fucking San Francisco. Hey, got these just live in the hospital, dude. You're already there. Anything goes wrong. That's how Trump would. Trump's just amazing when it comes to that. He's like, hey, look at this shit over here. Hey, MacGyver, the whole fucking thing. And I don't know, maybe the people around him freaked out. I mean, he's got these doctors and shit. Oh, you should shut everything. I don't even know. I guess, people not rubbing up against each other when they're sick, that's typically not a good. Most people are like, Let me tell you, I got venereal disease, so keep your distance. We're gonna go have pizza, but keep your paws to yourself. I don't know. I don't know. I guess I'm always alone, so I never notice. But at Starbucks, I'm like, barista's about 4 feet away, typically. Shit, I'm not like yelling at people. And at Starbucks, they make you yell at them. That's probably what contributed to it. Got this fucking grinders behind it with no fucking soundproofing. I don't know about you, but dude, if you could turn that grinder on and ask me what I want to drink, what do you want me to yell at you and spit on you? The fuck? I don't even know, man. Starbucks. I'm kind of glad they're taking a hit. They raised their fucking prices 21 cents. 21 21 pips on me. I was like, really? Oh yeah, it's a new day. And you could see it coming because they stopped posting the prices on everything on Starbucks. It's like if you don't know you're at Starbucks, you can't afford it. If you got to ask, what are you doing at Starbucks? And about 2 weeks, about 3 weeks after they raised their prices, I'm like, they shut it down. They probably saw it coming. This is our last chance to price gouge everybody. It's pre-price gouge is what the fuck it was. I don't know about you, but where I live, they went 21 cents, so up to 160 for a fucking drink. I'm like, really? And then you can't bring your own cup anymore. If you're right with that pen, keep it. What the fuck's going on, man? I was just listening to Rush Limbaugh. He's like, yeah, they want us to fucking go off the grid now, get a solar panel. Now when you really need to have your fucking Netflix cranked up and your subwoofers cranked up just so you can tolerate all this bullshit. Oh, sorry, the sun's not out. So yeah, I guess Trump's working on shovel-ready jobs and stuff. So, and people complain they're getting concrete poisoning next. What's next? Where's Mad Cow? Where's the fucking? Where's the vape piping problems? Where's all the truck? We used to have SUV rollovers. What happened to that? God, remember those days? SUVs are rolling over all over the place. Yeah, because they make shitty tires. And they had shitty tires on them. Plus high center of gravity. I don't know. I've never seen people just hit the fucking pause button on people's lives. 10 million people unemployed. And they estimated 3 million today. It was 6 million. Wow. I never look at those numbers for any trading reasons, but just the number alone is just a mind blower. But notice how the market did not sell off on that news. No, the market's dead in the water. It is where it is. When volatility dries up, markets are just where they're at. It's like somebody just turned off the volatility. Look at the British pound right now. So I did put some hedges on here. I got the British pound. Never left the station last night. The euro went on a breakout and then melted down into the vacuum when the news came out, just before the reports came out. Jobless claims. And then just kind of melted down into that gently. We had a trap trade on the 4-hour dollar yen. So here's my fancy indicator, the 1 period ATR. So I'm going to filter out what kind of trades you could put on an hourly basis. So the robot would be looking for a trade like, say, anything below 18 pips, he's going to put on a hedge. And so to backtest this and see what, if we stacked up all of these tickets, and here I'm not going to get in. See, I got in before that. Right, this is the 1 hour chart. So Asia, I typically put this on in Asia. We would have got chopped a little bit here if we got in. So here was the entry. We could have got in here, and if our targets are set to, like, I got the tightest one at like 16 pips with a 6 pip stop. But of course, realize I'm overpaying by 4 pips on that, so it's really only about a 10 pip winner, right? So you're risking quite a bit there. The only one that's really kind of good ratio is the 16 to 42, and but the probability of making your 16 is higher, so you have to strike a compromise between that. This could be a better take profit, but I was just throwing this together as far as Okay, 32. This should be a 34 or even make the 16 to 36 target. And that's why you have more of this. If you're going to come up here and click it all at once on the 4 hour, this is the 1 hour, but if you go to the 4 hour and you're looking for a very small bar, and you can tell here it's a very small bar. The last 4 hours, this is why you need the indicator, because it's really hard to see this little baby bar. But if you put on the hedge just there, that's the only trade actually on this whole chart if your threshold is 18 pips. If your threshold is, say, okay, I'm a high risk guy, I'm going to wait for right around a 34 pip bar and I'm okay putting a hedge on. In that situation, and by the way, this is a 100 pip grid we're looking at. So if we actually press the button religiously here on anything that's right here or lower, so I'm going to choose this entry. So I guess I'm back testing it. We're going to pull the trigger and a hedge there. So that puts us on the entry bar of. So here's how you test it. Very simple. Just see if this works. And of course, you could also figure out your targets should be here on this chart on the 4 hour time frame. So the time frames, it's just a perfect way to do it. It's 82 pip targets here. So if we got in on a small bar, the best trade on here, you can see from there'd be multiple scripts loaded at 34 pips and below, or even 40 pips and below, right? So you can, if you want to trade a little more aggressively, you're going to put like this is 42 pips, which means you would have taken this entry and this one and this one. This is your threshold for entry, and it's right there, And here you could be really loading up on that. And even though they trapped you, this is like 100 pips from here to here. Even though they trapped you on some of this, you made some money, then it exploded. And even if it took out the other leg, you made 80 pips. About 80 or 90, I think, up on here. And right now, this is real time here as it comes up. It's not waiting for that to complete. Here comes your ATR. So you'd already be cashing out. This is a 42 pip. We went from 18 pips to 42. You're out of that trade. And I should be getting out something here. I start with $5,000. And I think the broker is giving me a hedge discount. So notice the equity changes, but the margin's fixed. I think it would be, if I was in one leg in one direction, since this is 500 to 1, I'd be in like a 40K roughly, because I'm trading the pound and the yen, and they all have different prices. So I'm going to say 40K, 35K I'm in right now. If I was in a single direction. But since I'm in a hedge, I'm probably in about 70K instead of 35, because they're giving me they're not charging me for the other leg. I mean, the having a hedge is half the price per leg. So, but here I'm up, right? I haven't quite made a profit yet, but so now you just can't touch this until about 10 o'clock. Or you could come back at 1 o'clock if you're very gonna go bar by bar on this thing. So let's see. Let's track down the entries with our trusty time tool. And I'm going to go to the entries. It's a lot easier than looking at the bars. So the indicator to me is a filter. It's like FFT filter kind of thing. It's just like right up against the wall. So here's your entry. And you're in because, you don't know the direction. You don't have to. So that's a great winning trade. But here also, you would add to this position. So it's a great trade for, like I said, you could build a 4 robot that just gets in, but it's got to get in at least 20K on each leg at different prices with different targets. And you'd still have to say, Yeah, you have to have a lot of layers of exits so you can get out, right? Another entry, non-directionally. You just keep adding to this. You may think it's going to go up, but you don't have to think that. If your target's set to 80 pips, so you really are, you're waiting for a 40 pip bar to make 40 pips, right? Because this becomes an 80 pip bar. So you're making 40 pips clean, but it keeps on tanking. The next bar, that's just the range. So you still have to look at this and say, well, how far did we really go? So in combination with volatility meets direction, there's no volatility, and then there is. And it's the doji. So it's the drift up. That's low volatility. You put a hedge on. You don't have to know where the market's going to make money. It's just a classic rule. The time it's going to burn you is here, right? This is going to trade. You still made your almost 100 pips on that move. And then that's it. There are no trades until you get to here, and here's your beautiful trade where you get in, robot gets in, you get in, preferably a robot. He makes his 80 pips, well, maybe 90 here. This is 107 pips at the very top of this whole thing. And the trade's over. That's it, man. I mean, there's no, here's another entry. If you're going to say, well, I'm going to move my filter up to here, we're very close. Buy stop, sell stop, trailing, cancel, replace, just stacking up. So the 12-hour sell stop that you put in here is still sitting there, and it gets filled. It gets filled, and you could have probably just waited another, how many hours there? So that gets filled and takes us to, come down here, right, and make about roughly 100 pips. Another signal to put on a hedge, and this is where it's a law of diminishing returns because these are not fantastic moves, but that's why you have the scalp. I'm about to cash out of this thing, but I think I should have a 80 pip winner. I can see by here I have to design this to the instrument on the time frame I'm at. So I'd have to say, you know what, let's put in some 100 pip winners because every now and then, if we get in here and this won the next bar, so this shelf here is really another thing that's showing you that in 4 hours you could make X. In 8 hours you could make X. Because of this, the velocity of this move, I got to write these guys a letter. So I can't believe I can't delete the fucking objects without opening the drawing tool again. Well, I'll have to be in that mode, sir. We're not geniuses over here at our design department, you know. Who is this guy? Ralph, talk to him. Where these customers come from. But yeah, so this is a golden entry from breakout, and people say breakouts don't work. And of course, how would you set your target? Is it supposed to be, well, the range is X, so I expect an expansion of twice as much. That's not bad. You still had to wait, you know. I think that this plunge down, if you just say, yeah, that's a greedy target, I'm just going to take shit off along the way because nothing felt on the buy side of that either. You don't have to know where the market's going to make money. It's unbelievable, right? Here, enter. Okay, it drifts down. Not the best trade in the world. Granted, the guy that's looking at this wick going, I got a buy limit at the 100, shut up. I get it. But I'm talking about pure, like these are, that's a good trade too. But wow, look at this. Look at this dumb shit breakout stuff. So it's really not, you don't have to know anything about structure, moving averages, any of that shit. In fact, I should probably turn off this 1 period moving average. I'm just used to looking at it. It does give you an idea of when you see it drifting. Like to me, this is a drift down with the low ATR. Maybe we're expecting a pulse up, but you wouldn't have to worry about that here. Because what if you're wrong? You know, you're thinking, well, this is kind of Maybe it's turning around here. And the nice thing about confirmation entry here, where I mean, actually, you're probably already in the market here on this chart because if you have 4 pip entry, you've already gotten filled on some shorts for about right in here because this is a 100 pip grid. So you're building a hedge here. Every time it gets quiet, you get 1, 2, 3, and if you press all of these buttons, you build an enormous hedge here. Yeah, you finally make about 150 pips coming out of that to let it all play out. But I'll probably be out by here when I see it dip into, and it's not like I'm going to ignore it. I guess I would exit on structure, enter on conditions. Conditions are low ATR. I start building a position. I see where they're going, so I see I'm going to get in here and I go, oh wow. I see 8 hours clean down. I go, Jesus, man, they hit my targets. I could have had a 150 pip target on this one. I mean, to go the extra complexity, you'd say, this looks like it's going down. Well, then just wait for a small true range on each 4-hour bar. Now, you could do it on the daily, but now here's where it gets expensive. And you might want to trade a nano account because if I go to the daily, holy shit, this doesn't mean anything. And this is why I don't know why No Nonsense is using a 14-period ATR. I asked those guys in the Discord, why using 14? Well, it works the best. Are you Frank or are you Dodd? Oh my God, step away from the fucking, you're allowed to fucking go to your business levers. What the fuck happened to people? I tell you, this ATR of 1 is the holy grail because it really shows you that this is the dollar yen, and holy shit, this here is 400 pips a day. That is 400 pips. This here is the grid. You could see it going through these round handles and slicing the fuck out of that on the daily. And before that happened, it was really cool. This is a great trade here. If you could build a hedge in here, I just, it's so obvious that this is a 200 pip move because it just didn't do, it was going nowhere forever. And then kaboom, because the longer it goes, there's a pent up vacuum. Another analogy here is that this is coronavirus shutdown, and then that baby can't last forever. Pull back. So if you're waiting for this thing to pull back to your 100-period moving average, what is your criteria? A lot of these people do look at the ATR of 14. For God's sakes, I don't know why. And volume. Dude, this is better than volume. Does this look more dramatic? That, you know, there's volume in this. I could put volume up here just to prove how volume sucks. Volume doesn't speak to the tightness of my stop. Here, let me turn volume on. Another reason why volume is just complete bullshit, and so is level 2 and all that bullshit. It's just really, the most important thing is the size that you're in and how much room you're going to give the market to play out. Whether it slams around a little bit, everybody's getting in or out when the market's going berserkoid. Because if you didn't get out, you are like already back to the starting gate. Literally. I think there's actually, well, there's a volume indicator. There's one you could just turn on the chart here. So I don't have to go for the indicator. Believe it or not, they put it in here. Show volumes. And this might be red and blue stuff too. Oh, fuck. Here, I got to change the color of the volumes. So we're going to have to change the color of the whole chart, I guess. But you get my point, I think. I think it's got to be this, right? Make this black. Oh, shit, I don't know. Anyways, you can see barely. Holy God. I got time for this. There's no dynamics to it. There's tons of volume. It just doesn't have any dynamics to it. Trust me, it's a flat line. Here it is. Okay. It's the same color as my limit entries. Okay. This people go, well, there's just no volume in the market. I mean, who can even see that? If I stretch that, it's like almost imperceivable. I mean, this tells you how many pips you could have made. This doesn't tell you anything. It's like, oh, the volume here is like, well, it's just no volume, so I'm not going to trade it. Everybody jumped on the train here. This is the daily. Anybody buy here? Well, I got confirmation went long there. See? Yeah, that was good that you did that. And I see the volume picked up, so you thought, yeah, the big money's coming in. We're going to go, okay. This is so dramatic. Look at that. Then no volume. Boy, what a great turtle trade that was. Buy stop, sell stop, 100 pips to make 400 in 1 day. 2 days. Wow. Here's a top become a bottom. So there's a structure. That would be at the market trading, but this is, I'm waiting for this amount of volatility to get in. You could have put a hedge on here. And if you could afford to bracket that with about an 80 pip stop, in other words, you're probably already made, depending on how you write this script, which is critical. If this targets 300 pips, and this targets 200, and this one's 50, and this one's 75, and this one's 60, and this one's 20, and this one's 40 pips, you're probably out of, depending on how many times you click that, and built this kind of like very scary hedge because I don't know which way it's going to go. I mean, that's the beauty of it. You don't have to know. And it cost you a lot of money, actually, in a way, because you had to probably lose a couple of legs there. It goes flat line at the top. Volatility's, you could draw a trend line on this and go, volatility's drying up, and holy shit. These two voids, this was your buy to go long, your turtle trade here, breakout, and it's just so pip specific, like this breakout. No ATR, nothing, then kaboom. Now, you had to wait days to get paid on that, but boy, did that thing pay off. And I'm sure that was probably a trend trade for, like, say this moving average. And this is the perfect setup. It's a flag, it's a pennant, it's a failed double top. But boy, when they hit this thing, man. And then look at the rip back. So here's where it's perplexing because people are like, well, wait a second, buddy. We're in an uptrend. I'm buying the pullback. Here is the, right, everybody's going to scalp to here. It's going to keep going because this is a top becoming a bottom. And what the hell happened? And everybody's like, it's in an uptrend. Wow. I don't think the market thinks it's in a trend at all. I think every day is another spaz attack. And just because we filled this void, so it's kind of like cleaning out 200 pips, and then we still left this big void here. This one was already cleaned. So when the market came back and filled that void, now I'm talking structure, but this is where if you're going to get in on entry criteria is the market's not going anywhere. I want it to go somewhere so I can make money. You made those first pips and then another pullback in volatility, and you would have got on the short train here only because your stops were filled to the downside. Complete pure confirmation hedging. And certainly illegal. Just like having a restaurant. And it's so sad that, and you just gotta wonder. I mean, it's almost a conspiracy against people being prosperous or just having to live their own fucking life. You know what? See, the problem is the government licensed the restaurant. They own it. They tell you what to wear, what to do, how to wash your dishes, the temperatures. You got to have this. You can't have that kind of door on this. You can't. But when these guys, inspectors, walk out, there's nothing preventing you from coughing on every fucking thing in there. Nothing. And maybe that's why people are resilient to these things, because they have, the punishment they can take, and they built up their immune system. I don't know. Are people getting soft? Is that what happened? Obviously, it's coming after people that have diabetes, and they're not able to. I don't know, the insulin, whatever that thing is making you not healthy. So right now we're in these trades. I'm using like $94 a margin. I'm down $25. I'm down about $30 here. But we got to let this play out. And I'm not picking the best trade based on ATR right now, because I just to test it out, I ran the dollar yen and the euro and the pound. I don't think I'm running a guppy, because I'd have to really put a 100 pip winner and a 300 pip winner in there to really make money. And it would cost us more in the spread, especially Asia. The spread sucks. So as you fill these breakouts in Asia, it's not good. But that is the whole problem, is that not in this daily chart, but in Asia, if you're going to get a breakout, that the reason why the market's quiet is because nobody's trading, and that's what makes the spread wide. There isn't enough volume. So that's why people are saying, oh, you got to have volume to trade, because how can you trust these moves? They're just fake moves or something. The big move comes with volume, and I guess you're going to say, and then people say, I know how to read volume. Well, okay, I guess I could read it, what I think is going on here, that this big up move here had no volume. So it's a fake move. I don't know. And maybe that's what people are saying. But if I'm trading breakouts, I don't care, because I'm making money from a event that I know is high probability that there could be an explosion here. And when the market goes berserk here, I already know. I don't have to scan. It's pretty easy to scan. And the scan technique here is to just take this bar and say, listen, I'll take any trade below 160 pip bars. So you want to get in, you want to make 160 pips in that spike. You're going to looking for a 50 pip breakout. Anything here, you start building a hedge, and you would erode this move here. So this is a better view here. I wish I could get. See, I can set this indicator so it won't show 400 pips. I mean, like, what is that about? Yeah, that's like 4,000 pips right there or something. I don't know. It says 4. I'm on the dollar yen, so I think we have to do the math different on dollar yen. So this ATR may not work good on dollar yen. Warning there. But this is quite a bit. This has got to be it's 400 pips. From this one bar down, this big spike. In one day, that is enormous. So, but this whole move down is a different situation. The only entry times to enter this is going to be here, 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 here. Otherwise, if you don't limit it to that, I think the move's already over. So here's your entry, here's your entry, here's your entry. And man, you had to wait a long time to pay off here. Here also, you finally make 100 pips on this pullback, and there's your entry. This day, this day. So a whole crop of days here. You could have built on a hedge, and it paid off. And it took about 5 days to complete there, I'd say. This one too. You're cruising along, and just before this smash down, there was a small bar. So you'd be in, and then it explodes. And you're going to lose a leg. You got to write the scripts to fit each instrument. I would say if the markets are hot, and another thing the no nonsense guy has this readout of these are the ATRs of the other currencies. All you got to do here is go. Also, he trades the daily chart, so this kind of drama is not coming back anytime soon. And how do you know what's nominal, what's typical? Look at the weekly. Look at that move. Look at the monthly. This is a big move. Wow. Look at the frequency of that. Every now and then, big moves. What's going on here? Bad data down here is like nothing. That's a monthly. Here's a dramatic example. Just really low. ATR, a great run there. So you're just getting in here. You don't smooth this out with 14. You just get right here. There's your entries. Non-directional monthly breakout just crushes into this hole. Yeah. It reverses here, and of course you'd be watching that target at, I mean, this is amazing. 1 month. 1,200 pips in a month right there. But see, structurally it's filling this hole. But why did you care? You got in here because it was low true range before the drama. So I'm going to run this system. Try to stop trading it just before. Stop putting in hedges before London opens. When London opens, a U.S. market's open, and the thing explodes. I'm just going to go flat. So when this thing spikes up, whatever's up, I'm not going to wait to hit my. That's another thing is that if you enter like this, then when the market explodes, you can get out and say, all right, I mean, take everything off the table because it's that the drama's over and it's just going to go sideways, and then we can come back in with put the hedge, as rinse and repeat, put the hedge back on. So maybe the 150 pip targets don't get hit, but that, like, the party's over. Whatever pent up order imbalances were existing before the news, after the news comes out and it's exploded, it has to put itself back together and reconsolidate for you to get into the trade again. And it's a trading system. It's simple. Here there's no trade on the monthly. Are you waiting for it to calm down? Put a hedge on. It could go up or down. It doesn't matter because you're not looking at the trend in this instance of entry. Maybe you could look at it after you get in. But I guess the discipline is to let it unfold. So you may perceive this as an uptrend, and you only put your buy stops in to get picked up on confirmation and uptrend. But I guess what if you're wrong? So here you're thinking, oh, it's going sideways. It's just going to keep going up, and it smashes down, and you're getting in because of the low true range per month. Here you could get in low true range per month, and it really didn't go anywhere. It's just going flat, but it exploded in both directions, and you cashed out those legs. And so that is what makes it robust, is because it's objective, and it's we know that if it can't go sideways forever, you can't have these. You're going to see these spikes. So the spike's your friend. And for an options trader would put on butterflies, spreads, or straddles during this phase. That's what you're really doing here. You're straddling the market. Whichever way it breaks out. Let's take a look at the oil market. So we got this psychodrama here. But yeah, this is tremendous. That was unsustainable. Look at this one move. Wow. And here comes your non-directional systems making money just from entering when it's quiet. It's just so simple. The problem is, do you have your target set to here? $7, $7 a barrel. It's $10 a barrel from here to here. Get your targets like that? I doubt people do. Look at this in psycho stuff. Bam. Man. And then it goes and then it goes quiet. And I guess this is obvious trend trading nonsense here. Sell. Doing pretty good. People are probably cashing out. The volatility kind of kicks up. People wait for the volatility to dry up and they get in and baby fader trend up, slight retracement into this low structurally. But then, do you think the breakout traders care? No, they just made a mint on the next trade coming up here. Drifts up. Here comes the breakout systems. Kablamo. $10 move. Here comes the breakout. So when this starts ticking back, so if you could have a robot that was scanned, in other words, if it sees this, it puts on a hedge. Sees this, it doesn't put on quite the hedge. Here there's more interest in really loading the wagon on these because the payoff is huge. And then when this heats up, robot ignores that. He sees this, he gets in, he sees this pull. And maybe you could tell the robot, when you see a shelf like this, and now you're taking into account the previous bar, the previous ATR, which makes all of a sudden this complex. So you go from giant ATR to, wow, nothing. Let's put on a hedge. From something to nothing, put on a hedge. Of course, the robot's ignoring that bar anyways. But maybe you could tell the robot, when you see that drop off, wow, get ready. And at this point, you're cashed out. We're waiting for it to get quiet again. Put another hedge in this system. For me, I could see putting buy limits here and sell limits there. And we would have been short off of this rooftop if we're structure trading it. There's a whole different technique. You can see this void. You got sell limits, or your targets are there. And if you did get in here and it punched to there and you saw that and you go, I know I'm in the seller's window, you could close all profits on this one instrument. But that's going to change your, then you're not really sticking to these necessarily, but if you had one that said crude oil hedges and you knew the dynamics of the crude oil and you're like, yeah, this is a killer kind of trade. When the market gets quiet, let's the crude oil robot comes out and starts placing orders. He doesn't have to know a direction. Because even if he gets trapped on these kind of fader longs here, man, does that thing pay off? And he's not going to pull the trigger here, only here. And here's where it really makes money. And here's where I'd say your targets probably are not set to make $15 a barrel in 3 days. Well, not 3 days. It doesn't matter how long it takes, but if you're going to let it unfold, because if you take it off on the first day of explosion, you only made this. So that first move there, right, you cashed out that. You can't get on the trade here unless you go down the 1 hour chart looking for the true range of each bar to drop. This is true range of each bar. It's not really ATR. I'm just going to call it ATR 1 for because everybody knows what average true range is. It's literally just a TR. It's just raw TR. Not even average it. But if you say true range, people are like, what is that? So I don't know. Maybe they do know what it is. We're not killing it here. We're down like $33 or something. We're getting chopped up. But we know that this strategy, that is very costly. I mean, that doesn't sound good, but that's true. And I'm going to hedge here. And what's the time frame? So we could have cashed out of that. I could say, oh, we're in the seller's window. Oh, see. And I had to babysit the exit in that situation. I could say, yeah, look at this. Wow. Yeah. Boom. 1 hour breakout. Low ATR. So that robot has to really load here. Super tight. And the broker's got to have a nice tight spread, which they typically don't in Asia. So this might just pull back and keep going, or it's going to crush down, lose one of the other legs, and maybe it, since I'm trading three currencies at once, I'm kind of doing also costing more money to trade more currencies and spread this plan to all these other instruments. So if I go to the, what else we got here? British pounds. So this one has been trading sideways forever now. It's not going anywhere. So I'm going to focus on building the hedge here. I should have better targets, like 100 pips, because I could see this is about to explode. So that was the first trap here. I'm going to put another hedge on now. I know you really should wait, but I'm just impatient, so I'm just going to load these all at the same time. I'm just see how fat I can build this hedge. It's about almost 8 o'clock. We're 1 minute before 8 o'clock tonight right now. So we're 1 minute before the top of the hour. I'm going to put a hedge on right now on the euro, which these are good targets for the euro, but not for the pound. The pound should have an 80 pip take profit because that thing could just come unwrapped. We have one more day left in trading, and it's almost, this is kind of like it, right? There's only less than 24 hours left in the week. Looking for some kind of so you're really typically going to get in Asia, or you're going to look at the 4-hour bar every 4 hours. So there's 6 4-hour bars a day. You look at the chart 6 times a day. Not that hard. And pull the appropriate trigger here. So here's the 1 hour chart. The 4-hour chart is a little bit less work because the only trades that are going to pop out at you, this is the euro to the dollar. This should be obvious, jump out at you. And we're going to find out how many pips those bars can be on the 4 hours. So this would be a 4-hour, very smooth, tight spread here. I'd say this is your best bet, but I am doing it on the other pairs just to, I don't know. I want to see what that I put this 42 pip target. I got a fucked up mouse. These mouse, what's a trackball? They put this shitty fucking cord on here that goes bad in fucking like 2 years every time. Fucking piss me off. They're stupid ass. It's the only track. I have a marble mouse, and since I'm holding it and I move it around, it can't fucking withstand some movement. It starts to disconnect. I've got 8 of them. 8 dead fucking. It's $30 for a marble mouse. Fuck Logitech. Isn't there a better mouse out here? The Kensington's like a ball you could use to play like fucking croquet with or something. Look at the marble mouse here. It's like a golf ball size ball, but I can't handle mice that you drag on the desktop. I lose my mind. I see people using it. I can't even watch. What are you doing? Stop it. But here, you have to pay attention to the clock here. This is another thing you'd have to, every 4 hours you get. So I'm waiting 1 hour. We're going to update this chart 1 hour. And your broker has to, you have to know when your broker's got the update going to happen here. Still in drawing mode, wait. So 40 pip bars here. I think below 40 pips. 32 pip bars. Okay, 40 pips. So if you were scanning on the 4-hour chart and you're only going to trade 40 pip bar entries for the breakout, he's going for the breakout. So breakout trading, it really does work. And the lower the ATR, the bigger the order. bigger the ticket. So big ticket here, and we explode down here. So you put on a very big position here, non-directionally, and then just kablamo. Big win. In 8 hours, you made quite a bit of money. Then you've got the next entry here. Next entry. And, I mean, you could get out. That's the range. So at the end of and the line chart's there to just show you the end. So that's a big bar, and it closed near the low. So that's why I was going to put below here the open to close chart so you can see, because this is not a value of time. This is the range of each bar. But it shows you the entry point, and then you could look at the other open to close, because this is already closed to close. So I don't know, it's redundant. Here you can obviously see it went up 100 pips in 8 hours. This took longer, but still 100 pips. Longer moves. These are 12-hour moves. Down here. Breakout. Kind of a breakout here. But they trapped, you see. Because they blew out that. But they kind of made up for it. So that doesn't fit your criteria. So you would not take this trade even though this is a great trade. This is a market order trade. So going back to the market order trading, if you combine that with this, but then it might be too complex. But at least you can see what the trend traders are doing. That if they see a down bar at the market, they will buy with a tight stop. If it's a small move, they buy with a tight stop. Maybe they got stop hunted there. They buy if it's down with a tight stop at the market. It's down. It's directional pullback trading. You stop becoming a bottom, top becoming a bottom. We're about to march up in. Everybody's very bullish, and even the moving averages start to turn up. But the range trade, the breakout guy, is taking just this one trade here. That's it. He makes quite a bit of pips too, up into this bull trap here. But then the guy that put the buy stop there, if you put a wide enough stop down here, he's riding this move, right? This is why nobody agrees on trading. But the non-directional systems, just volatility systems come in here. Even though this is a pullback to the market order guy, he's buying at the market as it comes back. Or you could do a combination. I'm waiting for it to pull back, and I'm waiting for this. So this is when people do confirmation. Well, I need it to pull back, and I need it to be quiet, and then I will buy. And that's a trend trader's entry. It's got to pull back, ATR. Not the 14-period ATR, not it's just got to be literally bar by bar. Or how can you trust the system? Here you would have went short, right? If you're a directional trader, it's up a little bit, sell. The breakout traders are already going to, well, this is not updated yet, but the guys that are looking for the small bar, their stops are stacking up here. And maybe they're already short a little bit. It's a combination. You could just trade at the market and observe the breakout traders are getting in here, or you can blend it. And then the third element is that you say, I know this low exists, and when it gets to here, I'm buying on limits. Yeah, I'll buy down there. Who wouldn't? The breakout traders drive it down there, and every time it rallies slightly before it hits this target, everybody knows about this price. Doesn't mean we're going to hit it, and that's when the non-directional traders make money, because they got a buy stop here, a sell stop here, and they don't care. If it's trapping under the floor here in structure, and it weasels around and then it makes a run, as soon as it makes a big run, they're out. Right? Goes sideways, makes a big run, they're out. The counter trend traders buy on dips, so they'd buy this, pull back. They buy this as it's coming down. They think it's going up. So they buy every pullback. And not every one works. See, this one didn't work. There's only a baby bounce. That's why you have to have those scalps built into your system. Just not a full tilt move. A rally into the floor. Structure entry. But the breakout trader's on the fucking same trade. Yeah, they got in there. The limit order guy is looking at this, I would assume, for price entry. And he's going to, martingale, he's going to load up. He's got pendings out here for next week. And he's going to buy here on the euro. If it doesn't happen, the breakout traders take it. That down. So I'm up $20, so. It's the top. It's 8 minutes after the top of the hour. It's 8 o'clock Eastern Standard Time. And so I don't want to touch this when the market's hot. So at 9 o'clock, I'm going to look at this thing. I'm going to go around. If you see very low ATR, because I have very low targets here. And also when you're building the target side of this, which is just as important as the entry, is the risk, how tight your stop is, that you take this thing and you say, well, what is my average take profit? When we get to ATRs of 100, I'm out. This is a 100 pip drop in the euro dollar from nothing. Here comes, this is Sunday night. Breakout, run up. Not a bad trade, right? Sunday night. Breakout, then another signal. And you're going to put on, because of the volatility here, this can move easily 100 to 200 pips on a clean move. And maybe more, right? This is an amazing move. And you got in here. The low range. I think they trapped you on the long side a little bit there. But you more than made up for it on the southern side. This is one of those times when, yeah, you got nicked. You got a little bit bruised, but you won. But if you combine this with your market orders, so you're up 100 pips, you sell, and I guess this is where it gets complicated. If you wanted to maximize all three entry types, it's up, I'm selling. I can see this rooftop. I got sell limits there to trap to stop out the bears who are winning on this down move. So you're always looking to get, there's a stop hunt here because this is like kind of a fake breakout. But this doesn't meet the criteria. It's not until this one bar here, and then here comes the breakout trade. A little trap to the long side there. And then I got this bug just walked in my room. So this fucking mouse. I'm calling Logitech tonight. Their phones probably are not jammed. Everybody's having a corona fucking meltdown. Dude, once you get used to being beat in the head, you're not even going to notice it, okay? This is painting real time, this ATR. You just have to wait till 9 o'clock. That's all. It's a typical broker's is 9:15. 5 a.m., 5 p.m. That's dumb trading. So, because you are going to get chopped around here and not always make money on this style, why not do them all and maybe do 30% of each? To be fair, I don't know. It also depends on what you feel comfortable doing. Some people do not. They want to pick the direction, and they want an elaborate system with Fibonacci's and all this shit. I'm sure this is some Fibonacci pull up or pull back. Yeah, but this bottom is revisited in price for a moment, and like this has the most amazing entrance here. I would say dual signals. When you see two bars in a row like that, wow, look out, because something's going to give. 2 bars in a row. And you can have the robot say, if I see 2 bars in a row, Now here he only made 100 pips counter trend trading. I think a small pullback like that is the trend trade. It is also the you're getting in. That is the golden trade right there. It's also the measured move, nice and symmetrical, clean, just a clean move. But you're gonna have the limits placed here, or why does it do this move? Why does it do this pullback? Because once it nicks these, man, there's so much inventory up there. Never made it to here, but if we ever get up there, there's another place people will sell. Just like if it ever gets here, people are buying. They're going to buy. We could ride it on a breakout down into that. And every 4 hours, if I stretch this out, so the other thing is that if you don't care about the take profits, you care about the entry. You take this indicator and you say, I'm going to chop off the top. There's a way to force it. So I'm going to say my minimum is this. My maximum is going to be, I'm only trying to make, and on the yen, you're going to have to change this number because it's not going to work on the yen. I had another histogram, not this one. It auto-adjusts to that, but because the decimal point on the yen, it kind of screws up the ATR, but I'm going to put this at 100 pips. Because I just don't care about, I want to look for the entries. So I know that's off the scale there. That's 100 pips at the top. This way I don't have to stretch this out so much. But when you do, you see there's quite a bit of difference between these. This is 40 pips. No, this is going to be 30 pips. So anything that's in between a 30 and a 40, now you could say these are the premium entries. This is insane. And this is when I think the robot should say, wow, we're loading the wagon on these deep. This has got to be like only 20 pip bar here. And then, bam. Wow, that is so. It doesn't mean you can't sell with a tight stop because it's up small. If it's up small, sell with a tight stop. If it's up big, you got to sell with a wide stop. And if you have a 100 pip stop, you would have survived that. You have sell limits on the rooftops, and you have a low true range. So everybody's in on this one. This is quite a rally. 100 pips clean in 8 hours. Shear up. Then let's drift down to here, and wow, trend, just classic entries. And there's the. So I don't know if that helps, but I think true range of each bar, and it's hard to see it on here. I mean, I can see it, but boy, this tells you exactly how many pips that is and how tight your stop should be, or how wide your target. So this is the 100 pip yard line. These are 80 pip, 100 pip winners. I mean, these are great targets from a 32 pip bar to go 80 pip bar. That's a lot of money. And that's also money you don't have to worry about. Well, did I have to pick the direction? No, I don't think so. Here's 80 pips. There's 80 to 100 targets, and you're taking off something along the way. You're even going to make those 60 pips here. And just waiting for something. And if you're more aggressive, you're going to only wait for a 50 pip bar, which that's going to give you this entry. It's a little bit more trading. You're going to take this trade and this trade. This is a great trade. I mean, look at this thing. Dead in the water. Bash. Up. Wham. And you came back to structure, so you kind of, if your target's here, you probably want to go flat, and this is where you're making that decision, because if it comes back and retests like this, if you're going to wait for this quiet bar, which is quieter than this one, so maybe the change in volatility might be something the robot could look at. Like, the difference here, the fall off, right? Big fall off in volatility. Well, shit, get on that thing. I'm certainly going to notice at 9 o'clock if we're down here, I'm going to put another hedge on so we can pick this up for a move down. And this will just be a pure breakout system. It probably doesn't make as much money as really selling hard in a 100 pip move because you're probably trying to make at least the 100 and 200 on that. Right, 50 pip rally in 12 hours. Big payoff. I mean, that's 50 to make 200 pips. But if you're building that position into that, so this kind of wimpy rally, sell with a tight stop, and then here comes the breakout bots, down in. Now let me take a look around what I got running here. So here I got this one. This one's filled on the sell side, so that one's making money. I suppose that's where I'm up $2. If I see it get to this, I'm going to cash out, right? If I see it come into the buy limit window, I'm cashing out all that. But look how I didn't even have to think about this trade. I saw the low ATR. I know there's 2 hours of low ATR here on the 1 hour chart. You're going to have to count. Look at the ATR is dropping off, which it typically does in Asia. So here's the first. We always get 2 low ATRs on the 1 hour typically. This one, and this is just before London Open. London opens. They come down here. They scoop this out. Damn, this mouse. I'm going to throw it against the wall. So if you hear something. So the big smash auction down in. Liquidity here. Of course, it's kind of blind to the breakout traders. They're like, oh, I'm just waiting for the quiet down. Shallow pullback, market traders come in with tight stops. We know there's limits pending in here to go the other way. And they scoop that and come all the way back to here. So this is why 80% of the market's ranging, because it's all about this. Is this really going anywhere? No. People that are looking at this British pound going, well, it should go up, and that other guy, the guy Boris has that carnivorous disease. So we're going to go long the pound, or whatever kind of harebrained. So this is literally got to be a 200 pip psycho bar there. And what's the fuel for that reversal is that when they take out this low, wow, bam, to the floor, another pull back, and then so the line chart gives me the market trades. You're buying this, pulls back to here, you buy. Look at how it goes a little bit lower. So here's where they really stop on people. People buy here, and this really blows your mind. You buy here, you ride it up, you're like that trade? Yeah. And you might even trail your stop, I don't know, on the 15-minute chart on this thing, but look at this thing smash up, and once it tips into that window, rips back and even takes out this wick. So I don't know if you ever bought this pullback. I don't know if you ever done one of these, but you buy at the market here and you're like, wow, man, this thing is just bullish as hell right now. And then and it runs back here, and this is why people think they're manipulating the market. No, I think the market is so overdone here, and it's picked up so much fuel from this void. It's coming back, and it's going to do the same thing over and over. It's going to have to come back here. So this is a 1 hour buy at the market, shaved candle, reversal in this void. And the breakout traders made money into that, into the market makers buy. So they got in here, breaks out, down. If they don't get out, they lose, because if they put a stop here and they sell here thinking it's going down, that's where they get creamed. And so if you back tested that, you'd be like, yeah, that's good. But sometimes you're right. It just does keep tanking. That's why back testing is ridiculous. In that I'm actually doing 3 types of trades here. So I can do the market orders. It's up hard, I sell. I've hopefully got filled on my limits, and the breakout system is always going to get in based on low volatility. It would have made money on this move, And but the limit entry is always going to be putting the buy limits and these lows here. This one you didn't get filled, but it crushes into that void. It leaves a void behind on the top. Why does the market pull back so hard off of this wick tip? Because they stab up into it twice and it's satisfied itself. Come back down here and pick this up. Yeah, so I got some bizarre cricket in my room here. So as warm weather just brings out every like corona bugs or something. So here I'm like almost tempted to take this trade out, but I'm let go because they just dipped into this window and I see that kind of. But this is if you trade too much on this 1 hour chart, you see you're gonna just destroy the account. This was based on the 4 hour of the century. And you can't touch that. You just walk away from that trade and let it happen. I'm going to go to the next currency here. All right, what do we got here? So yeah, so that's the breakdown. That's how that appears to be going. And I think I put out one here too. I barely put any trades on this. Let me put up the proper template. And we'll just take one zoom out this. I'm going to go to different time frames on this to just see how absolutely this volatility really does matter. Everything came unwrapped. Every market is just gone berserk. So that is high ATR. You have to wait for this to calm down. Most people are going to wait for that to calm down, for their systems to calm down if they're breakout traders. Like, look at this thing, man. Now, I remember when this was happening, I thought, God, they just keep pounding it, and this is the trap and all this craziness. But once again, the breakout traders got in here, rode it into that, and they're just like, whatever. Now, here's what even the non-directional traders made money on this weekly breakout. But they only made 100 pips, And here comes the trend traders, or the turtle traders, getting in on the breakouts here. So as it dies down, they get in, and then they kind of get slammed there. But they make it back on this, into this big void up here. That's why the reaction up here is the way it is. 200 pips of insanity up there, now all the way back. So I would buy this week at the market. I'd put limits in here. I see a market trade there. Buy at the market, put limits in, and then wait for the true range to die down on the weekly. So here would be up, sell. Down here you're buying. You buy here. Maybe you scalp a little bit. There's a bounce in there. You got buy limits in here, which fuels this move. Here's your lack of volatility, so now it's time to launch the breakout systems. You got this drawing up here. The breakout traders make money on that thing as it just, wow, it just crushes into this void. But it's short-lived. People scalp to the floor. This is weekly, same drama. So we kind of typically get this rotation of different styles of trading, where the breakout traders are just nailing it, coming into the limits, and the people that are pulling the trigger because they're like, man, it's down, like every week it's down, I'm buying, this is crazy. Same thing here. They buy this, they make 100 pips, they buy this, and they make ungodly amounts, and they're looking at this vacuum and they realize this is the floor, this is the auction, this is that whole thing, and now it's all over, and then we go to a different phase now. Also, Wyckoff explains that in phases of the market. This is probably not going to be seen for quite some time. That is an astounding move. That blows me away. The only thing that compares is this. This is not a bad tick. This is real data here. Check that out. 2015. That is psychotic. Look at the daily. Man, you just don't realize how vicious these wicks are on the daily in this currency until you put this ATR true range. But so the party's over for a while. We got to calm down here. But it is astounding. It is amazing. I'm amazed. These markets amaze me. The amount that they can move is just ungodly. And there's the gold market. $10 handles here. You can take the 100 pip credits at $10 for gold there. So this is also a party that I think's over for a while. If we look at the year, if we look at the monthly, this is the most possible drama here is the climax there. And in this one, you would be getting in your trades here. It's like 0. But this is so hot. You're waiting for this to calm down. The infamous gold market. But I don't know if you can make any long-range projections on that. It's hard to say. But we're right here. We're down. I'm down a whole. I'm up $24, but I lost. I'm still in the same amount of tickets. So another thing you do. These are almost about ready to take profits. These must be the scalps. They're gonna make the 16 pips, and the stuff like that. But I can put this crop of. If you want to play with these hedges. If you want to put those in the platform, I just put it in a hedge, and I'm just calling out the time first, and then this is stop and take profit. I'm not showing the entry, how far the tickets are from current price, but typically 2.5 to 4 pips. 4 pips on the wide stops. It's not going to ever lose. It's very controlled risk because every time you click that, you know what you're risking over time. And if I could put these 2 hours in a separate 2-hour folder, so I know that, okay, I can hit that every 2 hours, and it's not as risky as laying in this 12-hour ticket. Because you're really committing to quite the range there. So here I'd say if I was going to trade gold with it, yeah, I'm going to put the... in a half an hour, if this is low, I'm gonna put a bracket on gold. If I had the gold script written, but it wouldn't run on there right now, it'd just blow it up. Looks like I might have cashed out of something. I don't know. My margin requirement just went down, so maybe I'm making money on something. Things are gonna heat up. I think I'm making money on this pound. See, pound's following through on the tank job, but. My targets are before this void. So that'll be another. If this crushes down. But I am curious. The rate of change of the ATR by bar by bar would be the fall off of how fast is the fall off between each bar. So this is such a big cliff. Starts to soften up. So I don't know if that's as important. Because this is quite the shelf here and there. Anyways, that's it. I'm going to post the indicators a comment. All I did was fatten up the lines, and then you can, in the common area, you can chop off the highest pip on there, but you're going to have to adjust for the yen on this one. There's a better version of this out there somewhere. I got another one of the demos. I've got a different version of that code. I'm sure there's a lot of versions, so you can just, instead of drawing a line, you tell it to draw a histogram. You just take the ATRs and you just set them to 1. The magic of true range, setting to 1. So load these up on the Asian session and then let them fly. The last trade I'll probably do is just before London opens. If the market gives me a low ATR on the 4-hour, I'll punch that ticket on that currency that qualifies, and then you're scanning for your ATR, your only filter is this market quiet enough to get into a hedge? I think that's a very crude criteria. It's a very simple plan to follow. I could probably have somebody on the street trading this, and I guess I don't have to. If I set every script at 8 hours and said press this button every 4 hours, there's a small bar. I'm sorry. Yeah, every 4 hours there's a small bar. Press this button. And I can tell them if you see a bar that's 30 pips, press this button. And they don't even have to know what that trade plan is. They don't even know what a take profit is. See it down there, hit those. Just hit this whole rack. Give them yourself, you have a favorites list of what you drop when you're below 40 pips, and boom, 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 boom. Okay, walk away. Just let it happen. It's probably the most easiest and you don't have to decide. The market's deciding. The market's telling you what to do. And it doesn't involve any type of moving average crossovers and stuff like that. And then at least you can have a trade system that's, okay, it's not killing it, but it can make an amazing amount of money randomly. It's random profits. And then you have okay, I see the market's rallied up into a structure, and you could sell one at the market, but I don't think it's going to work. That's not going to work all the time either. And the limit entry is not going to work all the time either. So if you have a blend, and if you're uncomfortable doing a certain trade, then you probably should do it because somebody's making money on that style. So there really is nothing wrong with stop entry. You just probably couldn't do it all the time, and you certainly couldn't do it when the market's on fire because it's too late. You should have got in before, right? So you should have bought all your ventilators before this thing, and then you could price gouge everybody for them, That's what I typically do. Start to hoard masks and stuff. Then the government knocks on my door. I understand you're hoarding masks. Yes. I wear 5 at a time. If people knew all the bugs in their body that, the body's weird because this corona thing is actually your body trying to defend itself, and your body just over defends itself. But I got bacteria in your stomach digesting food. My God. All sorts of crazy stuff going on you can't see. So I'm going to let this guy go, and then just before London, I'll bracket some more tickets. Depending on, I'm going to make some judgment calls, of course, about, that thing looks like it's reached its target. I'll clear that off. Wait for the market to calm down again and coming again. But starting off Sunday night, I'm looking for, I'd say 1 o'clock, the 1 o'clock bar, which is 2 bars into the day, is just before London opens. So if you see a small bar, it sounds really funny, but if you see a small bar, put a trade on the 4-hour chart. I guess that's a very crude system. And if you see a small bar going into the Asian session, so there's a bunch of news that just came out. Market went berserk, and it gets tight. And just put on a hedge. It could continue into the next day. It could still crush into a vacuum, but it could also go the other way, and all you're concerned about on that particular style of trading is this can I put a hedge on now? When the market's screaming in one direction and you're not in the market, you're waiting for the end of 4 hours. If it's up in 4 hours, you're going to sell. And if it's up 100 pips, you're going to sell with a 100 pip stop. If it's up 40 pips, you sell with a 40 pip stop. Same thing if it's down. Vice versa, like the guy said in the email. And the other thing is the limits. Now that's where to me it's a structure kind of placement, or it could be you're just trolling with limits beneath you and above you, also randomly, in an interval that's like, okay, I got a crop of buy limits and sell limits. I've done the sell limits like that, and I got not as many sell limits, but it's crazy. It makes money because they come up and tag. It's crazy when it spikes down a little bit. And that is also a little more difficult because you also have the time decay on the script. So if it's a daily script and it's 100 pips deep as opposed to a 15-minute script that's 5 pips deep. Because putting in a weekly script that is 10 pips deep, you're getting filled on that. So what are you doing with that trade? Is that supposed to be a trend trade, or is that supposed to be a stop entry to go down? Like, you're that close. The market's obvious. 4 hours, it's up. Now, if you see that they're coming up into a vacuum, you're like, nah, I ain't done going up. But I'm going to sell at the market. And also, if you're allowed to trade like hedges, you're going to buy the pull back down. But in the currencies that move 300 pips in an hour, when the market gets like that, and you realize that you didn't write a script that can do a 300 pip stop, and you're like, dude, I ain't stopping in front of this shit. Now, I'm going to wait for it to calm down, and I can get in. Actually, when you calm down, you can also get in the hedge and the tight market order trade. But it is more expensive when the market's volatile because unless you go to a nano account, you're going to have to just barely trade it, Whereas you could really load the wagon when the market's going sideways, and when it takes off in one direction, man, you could have $1 million position and just burst out of that thing. You're like, oh, Jesus Christ, we made money. But it's not because you pulled the trigger. It's because you waited for the market to calm down when the conditions were, so it's conditional entries. But so is the market, right? It's just a different set of conditions. And you're guaranteed to fill the breakout trades. That market ain't going sideways forever. You're guaranteed that your market orders are filled because you pulled the trigger on those. The one guarantee is the limits. There's no guarantee on the limits are going to fill. They're 3 completely different approaches to trading, and they really have their proper usage. When do you have this? When would you do a market order? And the price of the hedge is controllable because if you're going to set those brackets, you know exactly what it costs. Whereas if you get in at the market, God knows where it's going to go. You've chosen where the market's choosing when it breaks out. You set up criteria. It has to trip the wire. When you get in at the market, you're choosing a direction. And you're choosing the time of that event. The market's choosing it in the sense that after 4 hours it's down. I guess you could sell even. It's down, you sell, and maybe it keeps going down. And you're like, that's great. That's a great trade. That's the no-nonsense trade. It's up on the daily. You have all the little green lights. And she's even got, her family likes me, and she's got a cool car, and we're friends. I mean, we bang like Corona monkeys, but we're friends. My soulmate. Oh my God, somebody asked me, what does that mean? I said, I don't know. That's how we ended up like this. Corona's my soulmate. I'm going to name my daughter Corona. She's a pole dancer. A very clean hand sanitizer. Hand sanitizers and God, man. Wait till you see people drowning in hand sanitizer. The hand sanitizer challenge. People are inhaling cinnamon. Is that what's going to be next? How many masks can you wear? I don't know. Nobody wants to get cancer or any of this stuff. We need a cancer tote board. It's only fair. I'm really disappointed. We were very, very too narrow-minded here. All right, so I'm going to post the indicator as a comment, and I'm going to put a link to this. I'll put this in a zip file, this hedge thing, if you want to play around with it. Play at your own risk, it's a disclaimer here.